Good morning, everyone. Thank you very much for joining me today in this Buying a Home in the Netherlands webinar. Well, it's a sunny day, so it's extra special that you're taking some time out to join me today. It's been raining, feels like for weeks and weeks, but finally it's been dry now, so that is finally some sunshine up in this week. Before we get started, good for you guys to know, today's session will be recorded. Not only, well, my face, my voice, but also the slides that we have today. It will be shared with you guys most likely tomorrow and otherwise end of this week. So we'll have everything. If you need to jump out, no worries, you won't miss anything because we'll share everything by the end of the week for sure. Cool. So to introduce myself a little bit, well, you see me on the screen, you see the picture here. My name is Ludo. I am an expat buying manager at Expat Housing Network. I am primarily focused on the Amsterdam area. I call it the Great Amsterdam in the sense of not only Amsterdam, but also Amstelveen, Almere, Haarlem, Zaandam, anything laying around that could be considered close to Amsterdam. I live in Amsterdam, by the way, as well. I'm from the Netherlands, born and raised, moved to the US when I was around 10 years old, moved there with my parents, lived as an expat kid for 3 years, and then moved back to pursue all my dreams here in the great Netherlands. I am a proud father not of kids, not yet, but I'm a proud father of 2 cats. So if you guys are lucky, they might jump in front of the screen as they are a bunch of attention seekers. I live in a new build property. Used to live in the old character buildings in the east of Amsterdam and in the city center. And then around a year and a half ago, moved to Amsterdam North into a new build property. There are pros and cons on both sides, obviously. Well, we think greatness is achieved in the agency of others. What do I mean with that? EHN is not run by only one person, but we actually do it as a team. We have a bunch of internationals with us. We have, well, myself, obviously, but then we have Giovanna, who's from Brazil, speaks English, Portuguese, Spanish, and Dutch, actually, a little bit of everything. Rafaela, also from Brazil, speaks Portuguese, English, and Spanish, and is, well, getting better in Dutch every single day. Then we have Ellen, originally from the Netherlands, but has lived the majority of her life in Asia, primarily in Thailand, but also in Japan. It says here that she speaks English and Dutch, but it's we just discovered that she actually also speaks Thai and Japanese. So that's pretty cool. And then we have Rick. Rick is with us today. He is from the Netherlands, but has lived in South America and Africa for a couple of years. So is also a master of the Spanish language. Rick is with us today, not only to follow the webinar, but will actually be responsible for the Q&A. So if you guys have any questions during the webinar, feel free to pop them in the Q&A live. He will answer them directly. If there are any questions that are unanswered at the end of the webinar, we'll go over them live as well. So yeah, here for you guys. Brief introduction of Expat Housing Network itself. We're no traditional real estate agent. What do we mean with that? Well, first of all, we only help with the securing of properties in the sense of buying a property and renting a property. So we don't sell, we don't let. We have a sister company now that helps people let their properties, but EHN, Expat Housing Network, is primarily focused on buying and renting. We charge a fixed fee. This is a big one. We don't charge a commission or a percentage. We feel that if you are paying 400K or 800K, that you should still be paying the same fee, as the trick, so to say, is going to be rather similar. We know what it's like to sell in a new country. What you saw on the previous slides, a bunch of internationals working at Expat Housing Network, either born abroad or have lived abroad. And well, yeah, that is going to help you a lot in understanding what it's like to actually relocate. Some added value from Expat Housing Network. First of all, selling agents will take offers from EHN more seriously. We can book viewings when it's no longer possible for consumers, so to say. A lot of selling agents have dedicated viewing days for home buyers with a buying agent. Plus, they'd rather have someone at a viewing that is taking the process seriously with a buying agent. So we have first pick there. We support, obviously, by reviewing Dutch legal and property documents. This is very, very important so that you know what you're buying, not only from a legal standpoint, but also from the state of the home, the homeowners association, and that kind of stuff. Big one as well, we'll touch base on this a little bit later, but we help define the market value through market data, meaning that we know what the actual value of the property is. Can be either lower or higher than the asking price. This correlates with the max amount that you can get from a mortgage. So very important to know. We'll obviously inform you about the rules and regulations in the Dutch housing market, and importantly, we'll make sure you don't make the same mistakes as we have in the past. I'm not here by myself or just with Rick, but we're actually joined here by Robin, our mortgage partner. Would you like to introduce your team, Robin?
Yes, definitely. Thanks for the introduction, Ludo. So I'm Robin Uijtdehaage. I won't challenge you to try to pronounce my last name. That's a bit tricky. I was born and raised in the Netherlands as well. I've always lived here, but always like the variety of cultures and people moving here to the Netherlands, to Amsterdam, and try to settle down and put down roots here. And then it doesn't necessarily have to be, but can be experienced as a bit of a maze. And the key thing, and this is what gets our blood pumping, is to guide you through that kind of a maze of paperwork and so on, to find out what your options are, and not to limit yourself by that daunting idea of maybe you have to take care of a lot. That's everything that we'll take care of when it comes to the finances, when it comes to finding the property and securing the bid and everything. Then Ludo and his team are the ones to go with, and we'll help you out with understanding, first off, what your options are. So not only what can you afford based on all the rules and regulations and standardized calculations, that's all good, but it's also very important to know what your perception of your finances are. It could be very nice that you live in your dream house, but if you have to bend over backwards to pay it, that might not necessarily be the best, right? So that's also important, to understand your finances and not only see what your maximum can be. That's also to make it more future-proof. Now, I also don't do this all on my own. I'm joined by my wonderful team of Cesar, Egle, and Özkan. Cesar and Özkan are my fellow financial specialists, and Egle is our growth marketeer wizard, if you will, to get us on the map. And the two guys in my team can definitely put together the team, complements the team to give you the best advice available in the market right now. Now, what we do, we are not a bank. That's good to mention maybe. So we don't give out the mortgages, but we are your financial specialist. So we'll help you to find the best possible mortgage in your specific situation. We work with pretty much all banks available in the Netherlands, and they do tend to change their interest rates every so often. Every so often can even be every week. So at any point in time, we can always see, okay, what is the best setup of your mortgage? That's one thing, what makes the most sense. But also, what is the best interest rate, which is a hot topic right now, of course. And on top of that, every person is different, obviously. So everybody has their own situation, their own financial considerations to have. Houses are quite similar to that, really. So every house is different as well. Every house has their own specifications, different things to consider, different energy rating. Maybe there's ground lease on the property. That also means that each bank also has different conditions. So it means that every property has a best fit for different banks right there. Now, this is what we help out with, all these variables to narrow it down to see this is the best option for you out there. Now, that's what we very much enjoy helping out with. Now, I'll leave it to Ludo to move forward with the presentation, and every so often I'll pop in to explain a bit about mortgages.
Perfect. Thank you very much, Robin. So for today, I think it would be nice to actually get to know you guys as well. We've introduced ourselves, but well, potentially we can tailor this webinar a little bit towards the people that we're talking to. So I've just launched a poll, obviously not obligated, but it would be nice to see how you guys came in contact with this webinar, what age range you are, what your household looks like, that kind of stuff. And then, yeah, like I said, we can potentially tailor the webinar a little bit to your needs. So I see some nice numbers coming in. So you see the majority is actually between 25 and 34 years old. This is beneficial. I'll tell you later on why that is beneficial. And, nice mix of singles, couples, and families. it's always nice to see that the reason for people moving forward with a purchase is not only to build up equity or because the rents are too high, but I see that the majority just wants to settle in the Netherlands. It's always a great compliment. The majority is looking for Amsterdam, but also open to Almere and other cities. Cool. Thanks, guys. All right, I'm going to end the poll and then move forward. So I'm going to well, today's goal, obviously, to add value to you guys. Sometimes there are some rumors around that it's all very secret information and secret organizations where agents talk and meet together and that kind of stuff. Well, luckily, that's definitely not the case. And we from Uijtdehaage, but also from Mr. Mortgage, definitely believe that we should share this information freely. So that's what we're going to be doing today as well. Now, there are some things that are good to know that have changed in the market or that have changed from a regulations perspective. So let's touch base on that first. And then I'm going to run back to you, Robin, on this one. National
Mortgage guarantee. Yes. So national mortgage guarantee, it's or nationale hypotheekgarantie, which you might read once in a while online as well. That's the Dutch term for it. It's kind of an insurance arrangement. It kind of is an insurance arrangement for the perfect storm, really. So bear with me. This is not necessarily expected, and I definitely don't hope this will happen. But one of the key things is the housing market drops down significantly. So what we can see in the news right now, so what we can see in the market a bit, is prices tend to kind of maybe, bless you, Ludo, tend to drop maybe a bit. It really depends where you're buying and where the property is and so on. This is something I'll leave to the experts of Expat Housing Network. But what I'm trying to say here is if the property value drops down significantly, so let's say it drops down 20%, then it can happen that the value of your mortgage of your house is lower than the mortgage that you have outstanding. So let's say, for example, you buy a house for 300,000 euros, and in 2 years you have a mortgage left for 280, for instance, but the value is only 250. If you then sell, you have a remaining debt of 30,000 euros left. You don't want that. But let's say there's no way around that. Let's say you lost your job or you got disabled and cannot do the job anymore, so you lose your income. First, what NHG will do, that's also kind of an institution, NHG will say, okay, sure, we'll try to negotiate with the bank to maybe see if there's a payment plan there. If that's not possible, then you have to sell your house, right? Because you don't have an income, so you have to sell your house. Then if you have to do that in that market, you don't have an income, you don't have a house, and you have a remaining debt of 30,000 euros left. You don't want that, obviously. This is when NHG steps in. They will then pay this 30,000 euros for you, that remaining debt for you, so you don't have remaining debt left. That's what the basics are of NHG. Now, again, this is not necessarily a situation that we expect with a massive drop in property value. And also, it's very good if you don't get disabled and you don't lose your job. So why, in that case, if that risk is so small, why would you still do that? Now, there's a main reason for that is the interest rates. Average interest rates right now are somewhere between the 4.45 and the 4.6 approximately. Those are the regular interest rates if you fix your interest for 10 years to use as a benchmark. Now, if you fix your interest rate and you have the national mortgage guarantee on your conditions on your mortgage, then your interest rate drops to around 4%. So that's a massive difference. That doesn't only lower your monthly payments, that also increases your maximum mortgage capacity. So that's a balance we can find right there. Now, you can see two numbers here. In 2022, 355, that is the limit under which you can buy a property and close a mortgage for when you want to benefit from this national mortgage guarantee. So as of this year, 1st of January 2023, that limit has gone up to 405,000 euros. This limit is always based on the average selling price approximately of the year before. So the 405 is based on the average selling price of properties in 2022. Now, 405,000 euros, if you buy a house for this amount and the value is the same as well, then you can close a mortgage for 405,000 euros with this condition of NHG, so you have lower interest rates. If you buy a house and the value is 405,001 euro, you cannot opt for a national mortgage guarantee at all. So it doesn't mean that only for that €1 you have to do it differently. You cannot have it at all. So that's very good to keep in mind. So even if you buy a house, again, because this is usually a question that we get later on, if you buy a house for 500,000 euros, and you'll say, okay, sure, I have 95,000 euros laying around, so I'll put that in. So I only take a mortgage for 405, no mortgage guarantee, national mortgage guarantee, that doesn't apply. If you buy less, definitely by all means do that. They don't only do that out of the kindness of their hearts, this national mortgage guarantee. There is a premium, kind of not a monthly premium, it's a one-off buy-in of 0.6%. Obviously, depends on what the final value of the property is that you buy, what that specific amount is, but that's basically how that works. One-off buy-in, lower interest rates, and an additional insurance with a maximum of 405,000 euros. That's NSG in a nutshell.
Perfect. Yeah, definitely interesting to look at if you meet the requirements, for sure. Thank you. All right, something else, transfer tax. Something that the majority have probably heard of before. And also the reason why I said, well, if you're under 35 years old, you might fall into a scheme where the transfer tax can be beneficial for you. What transfer tax is, it's the tax that you pay when ownership is transferred from one person to another, or one owner to another. Now, in the Netherlands, we have three rates. Three transfer tax rates. On the left, the one that we see most often. This is the transfer tax when you're buying a property for your long-term own main residence or for a residential property. In this case, you are charged 2% of the purchase price as transfer tax. Now, in the middle, we have another transfer tax. This is when you're buying a property that is not for your long-term own main residence. In other words, 9 out of 10 times this would be for an investment. If you're buying to let immediately, or you're buying as a vacation home or anything like that, then the transfer tax it's a massive difference. It's 10.4%. It used to be 8% last year, but to make it even less attractive to buy as an investment, they've bumped it up to 10.4% currently. Now, on the right side, we have a scenario where you're actually exempt from paying transfer tax. Now, there are obviously a few requirements you have to meet in order to use this transfer tax exemption. First of all, you have to be a starter, or in other words, under 35 years old. In the starter, what they also mean is that you are not buying for millions or whatever. The max amount of a purchase price perspective needs to be 440,000 euros or less. Now, this exemption, you're only allowed to use once, so you have to be a first-time exemption user. If you meet all these three requirements, then you are exempt from paying transfer tax. If you are 36-year-old, but the purchase price is 300 and it's the first time you want to use this exemption, still you're not allowed to because you are not 35 years or younger. If you are currently under 35 years old and looking in this price range, don't wait too long, because once you're over 35 years old, then you have to pay 2%. So that can be a big difference in closing fees, which we'll be touching base on a little bit later. Like I said, we'll share this recording later this week. On the right bottom, there's a button, visit the transfer tax checker. You can fill in some personal information about your personal situation, and then it will actually mention how much transfer tax you will need to pay at the end of the road. But that's transfer tax in a nutshell. Let's see where you guys are in the process currently. I will launch another poll. And it's always interesting to see where you are. Are you just in the researching phase? Are you already viewing properties? Here and there we have, or somewhere in the webinars, we sometimes have people who already have an offer accepted, which is super cool, because that means that you're very far in the process and not a lot needs to happen anymore. Majority has not spoken to an agent or a mortgage advisor yet. Well, perfect. Again, that's also why we are here. Thanks very much, guys, for all the responses already. That went quick. Cool. Let's end the poll and we'll move forward with, again, adding some value to you guys. Let's talk about renting versus buying. Maybe a little bit strange to talk about renting in a webinar that is dedicated to buying, but I think it's important to know what the differences are and what the pros and cons are of renting versus buying. So first, let's start off why it could be interesting to rent a property. Because yes, there are some pros on actually renting a property. First of all, renting offers you quite some flexibility, right? Especially as an expat, if you are not sure what your plans are for the future, you might stay in the Netherlands only for a year and want to move on with your next adventure. Yeah, if you've purchased a property, you first have to sell your property before you can cut off your chain, so to say. When you're renting a property, 9 of 10 times you will only have 1 month's notice. After that 1 month, you're free to do whatever you like. It gives you a lot more flexibility. There are almost no taxes and almost no maintenance when renting a property. Why do I say almost? It's because, well, you still have your waste disposal tax, and maintenance, your small maintenance is also 9 of 10 times the responsibility of a tenant. But the majority of the taxes, like property tax, sewage tax, water tax, and maintenance like fixing of the roofs, paint work, all these expensive things, that will all be for the homeowner or for the landlord. So it's going to be a bit cheaper in that sense for a tenant. Plus, there's no down payment required. What do I mean with the down payment is it doesn't necessarily cost money to start renting a property. Of course, you have your deposit, but if everything goes well and is expected, you will get your deposit back at the end of your rental period. So it doesn't actually cost you money to start a rental agreement. Whereas if you're buying a property, you need to pay a notary, you need to pay a buying agent, a bank, the taxes for the municipality, research costs for the land registry. There's a bunch of costs, and we'll touch base on it a little bit later, that you initially need to pay, that needs to come out of own pocket before you can actually purchase a property. Now, some cons that are correlated with owning a home, that are correlated with renting a property, is that when you're owning a home, you need to pay your taxes, you need to pay for maintenance, and you have less flexibility, or in other words, it's especially in a market that is changing currently, where it's turning more into a buyer's market and less into a seller's market. It's becoming more difficult to sell property. So if you need to relocate now, but you still have a property that you can't sell, it's a lot more difficult and puts you in a lot more difficult situation. I hope you guys are still interested in actually purchasing a property because there are definitely a lot of pros to purchasing a house. Well, let's go over them here. Owning a home gives you stability, right? In a market, for example, now where it's becoming more difficult to sell property, or interest rates are going up, or things like that, in a situation where it's a little bit unstable, when you are owning your property, that gives you some extra stability. You don't need to leave your property if your landlord wants to sell your house or anything like that. Well, that's not possible because you are your own landlord. With interest rates going up, you can just with quotations, but you can sit it out and wait until the situation change again into your favor. As long as you keep paying your mortgage payments, you won't need to leave the property. Now, the monthly payments are partially interest, but a big part is also repaying on your mortgage loan. In other words, you're building up equity in that sense, or you're putting the money in your own bricks. So after a couple of years, if you're able to sell your property again at the same price that you purchase your home, you've already paid off, let's say, 10,000 euros on your loan. Well, that 10,000 euros is going straight back into your own pocket, and you've built up equity in that sense. There's currently also a mortgage interest deduction scheme, meaning that at the end of the year, when you're doing your annual income taxes, you can actually deduct up or a little bit lower than 40% from your interest that you've paid, which is making the money that you're loaning or borrowing even cheaper. Now, some cons of actually renting a property is that the expectancy is that the rents will keep rising. In other words, it's going to become more and more expensive to rent a property. There are no tax benefits and there's no creation of wealth. You're literally paying off someone else's mortgage, and you're flushing your own money down the drain, so to say. So sounds a bit tough, but at the end of your 5-year rental period, you've paid off the mortgage of your landlord, and put money in his pocket or her pocket and not in your own pocket. So from a financial perspective, Robin, can you enlighten us on the differences between renting versus buying?
For sure, definitely. It's partially a confirmation of what you just mentioned. This is an example of when your interest rate would be around 4%. So currently, these are two properties of around 525. 30 interest rates are a bit higher right now, just as an example. A maximum duration of your mortgage is always 30 years. And then based on this, when you compare the two similar properties that you can see here, the purchase price would be around 525. And then you can see the monthly payment for this mortgage would be around 2,300 euros. So let's say it's 24. The rental price for this property was 27,500 euros. So you can already see that there's a significant difference there. Now, what you can really compare when it comes to renting versus buying is, as Ludo so eloquently mentioned, it's when you rent a property, your rent is money down the drain. You don't get anything back there. You can compare that with the interest rate that you pay, right? Because interest is something that's money for the bank. You don't really get anything back apart from the tax benefit, but you don't really get anything back for those payments. When it comes to the 2,300 euros, part of that you do actually get back. Again, what Ludo mentioned, that's repayment of your mortgage. Every time that you repay your mortgage gets lower. When you sell the property, you get that money back. So that's kind of a way of saving your money in the bricks of the property. Now, what is money down the drain is the 1,650 euros you can see as the interest payments that you do in the first month. Now, so when you compare the 1,650 to the 2,750 rental payments, that's a massive difference. So in that respect, buying makes a lot of sense, right? But there is the investment that you have to do at the start of buying a property. There's all the purchase and financing costs, and the tax, transfer tax is part of it, and the cost for Expat Housing Network and Mr. Mortgage, they are also part of that, the notary and so on. Again, that will be stated more clearly in a bit, but those are all costs that you have to consider. This can accumulate to around, in this case, with 525,000 euros, then you have to consider approximately 18 to 20,000 euros, or maybe 16 to 20,000 euros in total costs that you have to input at the start. So that's an investment that you have to do. You have to earn back that investment. So how long does that take? Now, the break-even point is around 22 months. So let's say 2 years. So if you live in a property that you buy for 2 years rather than renting a property, then you're already better off. This does not consider potential changes in value of the property. So that's the massive difference. Now, it doesn't mean that after, when you stay in the property, when you consider, well, I'm living in a property for 2 years, that you definitely should buy. 2 years is a kind of a short period. I would say, okay, look at it from 3 to 5 years. That makes a bit more sense when you really want to buy property and want to live in it a long time. Now, this is to show you what happens after 5 years. So when you buy a property, the total monthly payments of buying a property with the specifics of just mentioned is approximately 141,000 euros. That is total payments. That seems like a lot of money, which it is, of course, if you just find it somewhere, that's very nice. But it also means that from this 141, almost 50,000 euros is equity. So 50,000 euros, that's something that you save. So you save 50,000 euros in 5 years. That's very nice. And from the remaining amount that you also pay, so that's around 90,000 euros, that's interest payments. Sounds a lot as well. But from that's where you also get a tax benefit over. So in that sense, less than 90,000 euros that you spend over 5 years. When you compare that to renting a property, 180,000 euros and nothing you get back. So you spend twice as much without getting anything back. So in that respect, renting makes a bit less sense than buying. Now, this is not a blueprint for everybody. Just make sure that you're well informed when you do something and just know what your personal situation is. But in this case, buying makes a bit more sense, financially at least, than renting.
Perfect. Thank you very much. So let's talk about some market drivers. We'll have two scenarios, but as you guys know, in the last couple of years, prices have been increasing drastically. So I think it's good for you guys to know what has actually caused the prices to increase, and we'll touch base a little bit later on what the current market is doing. But first of all, a few fiscal benefits that are currently in play, which makes it quite attractive to purchase a property. First of all, the transfer tax exemption I was talking about. If you're under 35 years old, buying under 440 and using the exemption for the first time, there's no transfer tax. Instead of paying 2%, you're paying 0%. Quite nice. The interest rebate, at the end of the year that you can deduct a certain percentage from your annual income from your interest payments. There's no capital gains in the Netherlands, meaning that if you make a profit on your property, let's say of 50,000 euros, yeah, you can put that 50,000 euros straight in your pocket or for a purchase of a next property. You will not be taxed on that win, so to say. There's currently, and this is only applicable for people with Dutch parents or Dutch family members, or at least family members that live in the Netherlands, that there's a tax-free parent donation. This used to be 100,000 euros. This year it's around 30. And in 2024, it's going to be ending completely. But if you do have wealthy family members that make use of the Dutch tax system, so to say, then they are able to donate 30,000 euros through a purchase of a property to you without it being taxed. So keep in mind, it could be rather nice. If you have wealthy family members living abroad and want to donate a certain amount of money for a purchase property, that will not be taxed at all. So if that's 100,000 euros, 500,000, whatsoever, more than welcome to bring that money into the Dutch economy. The low interest rates, well, of course, interest rates were lower last year, but historically, we still have rather low interest rates, especially if you compare it with 10 years ago or even further back to the 80s and such, then we're already in the double digits, and then we're still at a rather low interest rate. But also compared to countries like Germany, Belgium, France, or even further, we are on a low interest rate still, so making money rather cheap to loan. On the flip side, rents are rather high. Again, the expectancy is that this will also keep rising, making it more expensive to rent a property. So if you're planning to stay in a certain location for longer than 22 months that we just saw with the break-even point, it would make sense to purchase property, and therefore, more people are looking towards purchase properties. More demand, less offer means increasing pricing. Like in offer or the lack of supply, what I just mentioned, as long as there are more people looking for a property compared to the amount of properties that are available, it's the standard economy or economics example, then the prices are going to go up as well. And that's what we've been seeing in the last couple of years, more people looking for a property compared to the amount of properties available. Now, the current market, and with the current market, we actually mean the market since a couple of months now, has been changing a little bit. Like I mentioned, it's been changing a bit more towards the buying market, meaning that it's becoming, I wouldn't say easier, but at least less difficult for a buyer to purchase a property. A few reasons for that. First of all, the increase of interest rates. This just, for a lot of people is also a psychological thing where they could get a 1.52%, and now we're looking towards 4.5% and want to wait until a potential decrease again, even though the expectancy is that the decrease won't happen anytime soon. There are less buyers now on the market, and therefore prices are stabilizing because of that. There are 80% more active listings. This has to do due to the fact that it's becoming more difficult to sell properties. So properties are staying on the market for longer, and at the same time, the same amount of new properties are being listed. So at the end of the day, there are more active listings, more properties to choose from. The lack of supply is going down a little bit, and the amount of and the demand is going down as well. So there's becoming a bit more of a balance in that sense. Creating also less overbidding. Properties are being listed more towards their market value, and therefore the amount of overbidding has been going down as well. This is also creating situations where it's becoming more easy to negotiate with their seller or selling agent, which might feel a little bit nicer compared to the blind bidding that used to happen in the past. There still is a lack of supply due to the high cost of material. There were a lot of plans where new build properties were going to be built, but the material costs have been going up. Plus, there are new measures in regards to the I think it's the stikstof, what's it in English? The nitrogen rules which is not only affecting the farmers, but also the building industry. And it's slowing down the actual process of building new properties. So that is a little bit on how the current market looks. It's stabilizing a bit. I wouldn't say it's drastically going down or anything like that, especially in the dense populated cities like Amsterdam, Rotterdam, Den Haag, Groningen, Eindhoven, the places where people want to live. The market isn't drastically dropping or falling anytime soon. Cool. All right. Like we said, purchasing a house costs money itself as well. So let's touch base a bit on what kind of costs you have to keep in mind. Looks like a long list. That's because it is. We'll start off with the transfer tax. Generally speaking, 2% of the purchase price. Obviously, like I mentioned before, there is an exemption in place. So it might be that you are paying 0%, but generally speaking, you'll be paying 2% of the purchase price. Now you'll need to go to the notary. You need to go to the notary for a few things. If you're taking out a mortgage, you'll need a mortgage deed, typically between 700 and 1,300 euros. A transfer deed where the actual ownership is transferred, also between 700 and 1,300 euros. Keep in mind, if you are purchasing a house in Amsterdam, then you also need to go to the notary for your purchase agreement. This is like the contract that you have between a seller and you yourself as a buyer. There's an added cost for that as well, typically around 500 euros or so. If you're going to go for a bank or working with a mortgage broker, costs typically range between 1,500 euros and 3,400 euros. Typical real estate agent charges between 1 to 2% of the purchase price. Keep in mind, like we mentioned before, EHN charges a fixed fee. We'll touch base on our fees a little bit later. If you're taking out a mortgage, you will also need to get the property appraised because the bank will need to get a full report to state the official value. Obviously, I will do my research and have a nice, Excel sheet with all the numbers, etc. But unfortunately, the bank won't accept that. So we'll need to have an appraisal in, and they charge typically between 700 to 900 euros. Technical inspector, someone who's going to technically inspect the property, the state is as we expect it to be, 465 euros. Now, if you don't master the Dutch language, you'll need to have an interpreter in place when we're signing the mortgage deed and the transfer deed completely at the end of the process, because this process or this part of the process needs to happen fully in Dutch due to Dutch law, and therefore we'll have a sworn interpreter there to actually translate everything. 290 euros. Then a bank guarantee. During the whole process, you will need to make a deposit of 10% of the purchase price to show to the sellers that you're serious about the process. Now, we don't expect everyone to just have 10% of the purchase price laying around, so you can also opt for a bank guarantee. This is where a bank will actually make the deposit on your behalf, and this typically is around 250 euros or 1% of the guaranteed amount. Now, like Robin mentioned before, if you want to make use of the national mortgage guarantee, the insurance or the more desirable interest rates, you'll need to pay a one-time fee of 0.6% of the mortgage amount. Now, we have a third column on the right with the question if the cost is tax deductible or not. And what you can see is everything that is related to money or to mortgage is actually tax deductible. So we're talking the mortgage deed, the consultancy fee from the bank or from the mortgage broker, then the appraiser, and the fee that you're paying to the national mortgage guarantee. If the bank requires you to have a technical inspection done because the property is very old or you're going to do a lot of renovations, then the technical inspection report is actually also tax deductible. If you're having a technical inspector come by just for your own peace of mind, then it is not tax deductible. All right, then some tips to win in the current market. As it's a bit unstable, it would be nice to know what are some smart things to do in the current market. First of all, and this is I think the most important one, it's value. You need to know what the market value is. Why do we need to know this? Well, we have a property here, a very nice property listed by Hopma Makelaardij with an asking price of 395,000 euros. In the Netherlands, there are no rules or regulations when it comes to listing a property at a certain price. So if Hopma Makelaar woke up that morning and thought, well, I think I get 500 for this property, he would literally, even though the value was, let's say, 395, he would be able to list it at 390 or list it at 500. If he woke up and was a little bit annoyed, or he had a hangover and thought, well, don't want to put too much energy into it, he might have wanted to list it at 200, also allowed. So there are no rules there. A 395 might just be what he wants to get for a property, but not be a good representation of the market value. So if we look at an example here, we have the asking price of 395. After we did some research, we did a price research, and we compared the property with properties in the area and their purchase prices, we actually see that the market value is not 395, but the market value is 415. This is also the amount that the bank will give to you, or the max amount that the bank will give to you if your mortgage cap allows it. So that's why it's important to know, because if you think you can only get 395 and then make an offer of 405 because you only, in brackets, have 10,000 euros in own savings, then you would still be under market value, while the bank is actually able to give you more than what you thought you'll be able to get. So 415, important to know here. In a competitive market, we might need to overbid a little bit to actually secure the property. There are other people that also are interested in the property. So to actually secure the property, we have to have a purchase price of 435. Well, what you see a lot in the newspapers and that stuff is this number, the overbidding percentage of between the asking price and the purchase price. In this case, 10%. When I'm talking about overbidding, I really want to disregard the asking price and just look at the market value, because like I mentioned before, asking price doesn't say too much. So in this case, in my opinion, the overbidding percentage is actually, again, only in brackets, 4.8%. If the property was listed by a different agent and that agent listed the property at 375, still market value is 415, still purchase price is 435. Then what we would have read was an overbidding percentage of 16%, which seems rather massive. Well, actually, the overbidding percentage is still only 4.8%. So this is why it's very important to know what the market value is, so that based on the market value, we can come up with a competitive offer. But also to know that if the market value was actually 400 and we offered 435, but we had 10,000 euros that we were able to put up from own savings, then we would not be able to secure the property itself, because the bank will only give us 400 and not 415. So good to keep in mind. Then another example, something that we've been seeing lately in the last couple of months, is a example where, again, asking price is 395, but the asking price is 450 in this case, but the market value is actually lower than that. It's 425. So the agent has came up with a new strategy and trying to bump up and just to have a 450 as a invitation to make an offer, and try to get as high as possible on the asking price, while the market value is actually 425. In this case, it's just as important to do a price research and to define the market value, because if we would have made an offer of 450, but we don't have 25,000 euros laying around, then the bank will obviously reject a mortgage of 450 because the market value is only 425. In this case, let's say we purchased the property at 450, we would need to have 5.5% out of own pocket to cover the difference between asking price and market value. Now, same is here, asking price 450, market value 425, but we purchased the property at 425. This is great, of course, because then we're purchasing the property under asking price and again at market value. Now, the difference between asking price and purchase price is again 5.5%, but the difference between the value and the purchase is 0%, and that's what we aim to be, either purchase at market value or purchase a little bit lower than market value, especially in the current market. Now, a winning offer. What does a winning offer look like? This correlates a little bit with what I just mentioned, but offering a good offer means also offering a good price. And not always the highest price, because if we just move back to the example that I have here, if the market value is 415, but we offer offer of, let's say, 450, and we have 20,000 euros in savings, then we can offer 450. But if we say we need a value, or we need a mortgage of 450 as well, then the bank will not give us that, because the market value is only 450. So that shows that we haven't done our research, that we're not aware of the market value, and that we're not aware of our own financial capabilities. So even though the purchase price is on the high side, and of course the sellers would get a lot of money in that sense, the chances of actually the purchase going through is very slim, because the bank will not give us the amount that we require for the purchase. So it's offering a good price in comparison to actually the highest price. Now, offering security to the seller is important as well. How do we do that? Is by offering an offer with a subject to financing clause, and then the amount that we put in the subject to financing will be decisive in that sense. So what I mean with that is, if we need 100% financing, then we are 100% relying on a third party in regards to our financing. If we have some own funds that we are willing to put up to the purchase, then the amount that the amount that we're liable for from a third party is less, and therefore the chances of the purchase going through is higher. So this offers more security to a seller. You're taking risk away from the seller, you're putting it on your own plate, but in a seller's market, this is definitely something you want to do. Obviously, something that we'll have to tweak once we're actually in the offer process and making an offer. But now already good to know that offering security to a seller is obviously going to help in getting an offer accepted. Now, this is the third point, something that is becoming less important, but offering the least amount of hassle. When a seller is getting 3, 4, 5, 6 offers, then they just want to sign a purchase agreement as soon as possible and don't want to have many clauses or many subject tos in the offer. But especially in places like Amsterdam, it's important to, for example, have a technical inspection, because the properties are sometimes older than 200-300 years old. So it's, you want to have a property technically inspected. So putting in a subject to technical inspection clause is something that the selling agents 9 out of 10 times understand, and I think also very important to keep in, to make sure you know what you're buying. Now, the last one is something that has become more and more popular, and that's adding a personal biography, or at least a personal touch towards the offer, and explaining who you are, what you like about the property, what you intend to do with the property, that kind of stuff, so that the sellers know that they're leaving the property to someone that is going to enjoy the property just as much as they have. But also, if you're buying in a property that is primarily elderly people, where they are looking out for each other, then they prefer to sell to someone that is not a party person, or someone that is going to renovate for years and years and that kind of stuff. So it might be beneficial to explain a little bit who you are, where you're from, what kind of work you do, and that kind of stuff.
Ludo, can I add something to this?
Yes, please, for sure.
So when it comes to the second point, offer security to the seller, inputting savings can indeed be one of the points how you can make it more interesting, for sure. Another thing is to offer security to the seller, but also to yourself, is obviously to know what your finances are like. Now, it's good to know that you don't have something like a pre-approval in the Netherlands, which you have in a couple of countries. For instance, in the US, you can go to the bank and they will already say, well, here's your mortgage, and go find a house now. With a ton of disclaimers, mind you, but still. So you don't have that specifically in the Netherlands. What we do is we do set up a financial analysis, so you have a clear idea of what your range is, but also a mortgage certificate. So every time that you look for a property and think, well, hey, this might be it, and you want to put in an offer, we can set up this mortgage certificate, which is very nice for you, because you have some security saying, well, hey, yes, the guys from Mr. Mortgage have looked everything through, and you can put in an offer. But you can also share this with the seller. It doesn't state any particular information about your income or something, but more importantly, that specialists have looked into your finances and say, well, yes, you can definitely secure a mortgage. Then that even might also give a bit more security to the seller, and might just be the tipping point that you know that they know that you work with people that know what they're talking about. If you put in an offer without a real estate agent, for instance, then you might be considered more of a lone wolf, and then who knows if you move forward with the actual buying of this property. But if you staple yes with a real estate agent and I have my finances checked, then you pose less risk, more security, and higher success rate. So just want to add that. Thanks, Ludo.
Yeah, perfect. No, thank you. Thank you very much for adding that. And the higher the success rate, the better, obviously. So it's worth investing in that. Cool. All right. Then due diligence. This is the third one that is very important. When I'm talking about due diligence, I'm talking about the technical inspector and the appraiser. Now, before I move on, I was curious what you guys think. Do you book them before or after your offer is accepted? I'm going to give you a minute or two to fill this in the chat to see what you guys think. Will we book these inspectors before we make the offer, or will we book them after the offer is accepted? Give you guys a few minutes to pop it in the chat. Don't be shy. Right, I'm getting some befores in, also some afters. We have a nice divided group here. I won't hold you in suspense much longer. There's exactly the great division between the before and after here. Well, when I'm talking about the sweet spot would be right over here. And that is after the offer is accepted. Why is that the case? Two things, actually. First of all, these inspectors don't work for free, unfortunately. Every time they're going to technically inspect the property, every time they're going to appraise the property, they charge you their fee. And now, especially in the market of the last couple of years, it was definitely not a given that we would get our first offer accepted. So if it takes 2-3 offers, you'll be paying them 2-3 times before we actually move forward with the purchase. So yeah, unless you want to be spending or wasting money, so to say, on these kinds of things, yeah, we advise you to do it after. Second reason is that in the Netherlands, there's only a binding agreement. So if we get the offer accepted here, we have typically around 1.5 weeks before we sign the purchase agreement. Now, in this 1.5 weeks, this is the time to do our due diligence. So we'll have the inspector and the appraiser come in as soon as possible after the offer is accepted. So that's right around here, we get the reports in. Now, if there's any red flag that come out of the technical report or the value is completely different than what we expected it to be, we can still actually cancel the purchase without having any financial consequences because we have not signed the purchase agreement yet or the contract between the seller and the buyer. Now, in the Netherlands, as a private, if you're buying a property for own residence as a private party, then you also have a 3-day cooling off period or a reflection period where you can actually wake up in the middle of the night and think, oh, shoot, what did I do? Still pull out without having any consequences. Only after those 3 working days, you are obligated to fulfill your obligations that are written down in the purchase agreement. So, sweet spot right over here, just after the offer is accepted. To give a broad timeline of how the process will look like, from left to right, obviously, we'll have to start the search. So this is where we'll together with properties. And then, yeah, I always think this space between offers submitted, approved, and start search is very small because a lot happens here, actually. You'll book the viewing, you'll go to the viewing, make sure the property is up to your expectations and, well, you like what you see pretty much, you like the neighborhood, etc., etc. Then if you do like what you see and you still like the property, still interested and would like to make an offer, we as a buying agent will help you with the price research and we'll check all the properties or the property documents, like the medical file of the property, so to say. We as a buying agent will also be in contact with the selling agent at that time, see what kind of offers they have in, see what kind of interest there is in the property, and then we'll submit a final offer. That's what happens here. Few hours of sitting like this, hoping to get some good news. Well, assuming that we do get good news, this is the 1.5 weeks that we just saw on the previous slide, where we have the appraiser come in to appraise the property, technical inspector to come in to technically inspect the property, and in the Netherlands, we'll go to the notary to actually sign the purchase agreement. Then this is also the moment together with Robin that you apply for the mortgage. So you press the big green mortgage application button. and yeah, typically takes around 4 weeks to actually get everything accepted. We say 4 weeks, but I know that Robin and his team can do it a lot quicker. We've had cases where it's accepted in 1 week or 2 weeks. So yeah, don't wait too long. But generally speaking, also if you work directly with a bank, they will take more time. They like to take their 4 weeks in that sense. This is also where the cooling off period ends. You can apply for the mortgage already before the cooling off period ends. You will apply immediately once you sign the purchase agreement. Now, when we reach this stage where the mortgage application is approved, we have another hooray moment where not a lot can go wrong anymore. The property has been secured, the financing has been secured. So now it's really just waiting until the date that has been agreed upon together with the sellers. Sometimes the sellers still need to find a new property, or they're waiting for the keys of their new property. So this can take between 1 month and 6 months, depending on what the sellers need. You'll know this obviously before you actually get the offer accepted. Then around a week before we have the transfer, we will receive a statement of completion from the notary. This is a fancy word for final invoice. This invoice contains my costs, it has Robin's costs, the purchase price, the transfer tax, the municipal taxes, the land registry costs, any admin fees that need to happen, all that kind of stuff will be paid to one person, to the notary, and then the notary will distribute the costs accordingly. So that makes your life a lot easier. The only costs besides this is the technical inspector and the appraiser. They will need to be paid directly, but the rest is all via one invoice. You pay that to the notary. Then on the transfer date, we will do different things or for a final viewing. This is just to make sure that the property still is in the same state as we've agreed upon. To give an example, I've had a case where we actually bought a 3-bedroom apartment. Then between signing the purchase agreement and going to the transfer, the sellers decided, well, those 3 bedrooms, they're rather small. Let's take down one wall and create 2 bigger bedrooms. Well, obviously this is not allowed and not something that should happen. So this is why we go to the final inspection to make sure that we're still buying a 3-bedroom apartment. In this specific example, the transfer had to be delayed and the sellers actually had to put back another wall. So important to double check. If everything is, and luckily that's pretty much always the case, if everything is how we expect it to be, we'll go to the notary. We'll sign 2 different documents. First of all, the mortgage deed. This is the deed where you are officially in debt with the bank and give the debt the right of mortgage. And you'll sign the transfer deed. And this is where the sellers give ownership to you. So they are saying goodbye to their ownership and you are welcoming the ownership of the property. Now, this is also where you get the keys. And from here on, it's party time. You can move and you are officially the owner of the property. Now, there's a liability term here. We mentioned it 2 months, but we really say only take 2 weeks. You wait, the less the less strong our position in the seller. But this is a moment where you intensively should use your property, open all the windows, open all the radiators, make sure that everything works as expected, because within those first 2-3 weeks, we can really go back to the sellers and say, hey, you guys promised this would be the case, but it's not, so please fix it or reimburse us for any maintenance that needs to happen. That is from A to Z how the process will work. Obviously, there are a lot of variables at play, a lot of things that can alter the process. From a timeline perspective, it can all happen in 2-3 months. If you are not relying on a mortgage, then you can go to a viewing today. Today's Tuesday, you go to a viewing today, you have it accepted, make an offer and have it accepted tomorrow, then make the payment on Friday, and then you can move in and have the transfer next week. Literally, it can happen that quickly. But if you are relying on a mortgage and the sellers are still buying their new property, then it might be the case that you will only get the keys in September. So there's a lot of variables there. Good to keep in mind. Cool. Well, that's it from a process perspective and from the webinar in regards to just pumping out information. We always get some questions that are, like I said, frequently asked. So I think it's important to go over some frequently asked questions. If we still have some questions afterwards that are in the Q&A, we will also go over them. So feel free to pop them there, and either Rick will answer them now or we'll answer them at the end. All right, Rick, do you want to help us out here?
Yes, I think most of the questions were answered during the webinar, but again, if you have any questions, feel free to put them in the Q&A. But the first question is, can I get a mortgage with a temporary contract or as a freelancer? So I think this one's for you, Robin.
Yes, makes sense. Thanks. So short answer, yes, sure. But to elaborate a bit more, let's focus on temporary contract first. When you're employed, then we can consider your current income. When you have a permanent contract, indefinite contract, no worries, that's just what we can use. When you have a temporary contract, the bank wants to have some security, right? So you have a duration for 30 years. So they would like to have some indication that for the foreseeable future, you'll have income. When you have a temporary contract of a year, then they know if it lasts for more than a year, you'll still have income. So what they require or prefer to have is then that your employer says, sure, this lovely person does their job very well, and we intend to keep them on after the 1 year fixed period has ended. Intend to keep them on for an indefinite period. Now, this intention doesn't really mean anything. It's an intention. It's not legally binding. So if your employer does let you go after your term, you cannot use that form that doesn't hold up in court, so to speak. But it's an intention, and then the bank is happy. Therefore, because it isn't legally binding, the majority of the employers do not worry about giving that out. If your situation is different, check in with us because then we can see what we can sort out here. So that's the basic thing with a temporary contract. Now, let's say you're not employed or you're self-employed, you have your own business, you're a freelancer, pretty much the same thing. Then the preference for banks is that you have a history in the Netherlands of 3 years. Then we can use the average of your income. Now, you don't necessarily need the full 3 years. 1 year is sufficient, but that is a hard requirement. Any bank will consider your income from being a freelancer or self-employed when you have at least 12 months history of your registration at the Chamber of Commerce, the KVK, here in the Netherlands. Now, if it would be the specific situation that you already had your company abroad, and then you moved it here, still first 12 months, then we can even use that history from abroad to base your income on in the future here in the Netherlands as well. So then a variety of options are possible. Definitely check in because these situations are a bit more tailor-fit to your specific situation. But usually there are more than enough options here as long as when being self-employed, 12 months is the mark where you can get a mortgage from.
All right, thank you. I think that was a very clear answer.
Thanks.
Ludo, what happens if you want to leave the country after several years?
Yes, perfect, cool. I think my internet is unstable here and there, but so please let me know if I need to repeat anything. Well, I think a very fair question because the majority of the people in this webinar will be expats. I think in general, three situations that can happen. Or yeah. First of all, it's very simple. You keep your home, but you will also keep your mortgage costs, meaning that you leave it for a vacation home or anything like that. But you will be paying for your mortgage costs as well. Not a lot changes then for you. You just have some extra costs. Second one, something that we hear a lot is the question, can I actually rent out a house? Well, yeah, that could be a possibility. Keep in mind, you do need to get permission from your mortgage provider or from your bank. It might also be the case that you need to change your mortgage product because if you live in a property, you have a residential mortgage. If you're going to let your property, then you'll need a buy-to-let mortgage. And there are some differences there in regards to interest rate, but also in the loan to value. So yeah, keep in mind, but that should be a possibility. Then the third one, also a very easy scenario, is where you sell the property, and then you don't have any penalty or capital gain taxes either. The money that you get from your purchase or from the sale is actually put in your own pocket, or put towards a new purchase in a new adventure. So this is typically what would happen if you want to leave the country after several years.
Thank you. And this question we already got during the webinar. So Robin, can you please explain how it works if you can rent out your house or a room?
Yeah, those are very different things actually. So let's start with the room, because with the house you have to completely change your mortgage. But with the room, basically what it means, when you own a property and you have a spare room and you want to have someone come there, you can rent it out, no worries. But if you contact the bank and say, hey, I'm renting out the room, they'll get flustered and stress out. There's a reason for that, because if you have somebody living in your house, a tenant, at some point they'll have tenant rights. So if you then sell your house, the tenant doesn't have to move. They can just stay there and you cannot evict them. So what happens then is you sell a house with the person still in there. Now, that's not necessarily what the majority of people want. So what happens then is the value of a property drops if there's still a tenant in your house. You don't want that. And this is what the bank would be scared of as well. Quick and easy way to mitigate that risk is to, in the contract, your rental contract, include eviction clause. Just say, if I'm selling my house, I'll give you 2 to 3 months to find a new location to be in, so you cannot have this tenant rights. This is something that they sign and then confirm that you can actually sell the house. That's the way to minimize that or mitigate that risk. Now, when it comes to the income of your rental income, that is something to look into when it comes to the tax. When you rent out a room, at some point your rental income can be taxed as income tax. When you rent out the house, that's completely different. So you have a house and then you want to rent it out and move to your new home, wherever it is, then you have to refinance. So you have to change your mortgage into an investment mortgage. None of the banks in the Netherlands allow you to rent out your entire house with a regular residential mortgage on it. Only one exemption there. Only when your company in the Netherlands sends you away to another country or somewhere else to work for a very specific time. So it has to be predetermined. It's for a maximum of 3 years, usually depending on the bank. So if your company sends you abroad for a maximum of 3 years, know that you'll get back and live in the property again, then they usually will allow you to rent out. In any other case, you have to refinance into an investment mortgage. The conditions are a bit different. You cannot finance up to 100%, usually about 70 to 80% of the value. So you might have to input some of your funds and the interest rates are a bit higher. So room, no worries to rent it out. Be sure to mitigate the risks. And renting out your full house, you have to refinance. So change your mortgage into an investment mortgage.
Thank you. Then I think Ludo, what is the 10% I need to complete?
Yes. So, well, to explain this, from the moment that you sign the purchase agreement, both parties have obligations. Sellers have obligations and the buyers have obligations. Of course, the buyers, besides obviously the property that they want to purchase, have not a lot to lose, right? If at one point they feel like, oh my God, what are we doing? We don't have the money, we're fully in debt, there's a horror scenario. Technically speaking, they flee to Panama or whatever and just never show their face again. It won't happen too much, but they could do that. In this case, the sellers are left with a property that the market has changed, the purchase price has to come down. That's just a situation that, especially for the sellers, they want to avoid. So at one point, they put a extra incentive in play for the buyers to move forward with their process. And that is where the 10% deposit came into play. So typically 1 week after the mortgage has been approved, you as a buyer will have to make a deposit. This is always 10%. So compared to countries like the US or anywhere else actually, where the amount of deposit you make has impact on the chance of getting the offer accepted. In the Netherlands, it's always 10%. 1 week after the mortgage is approved, you'll make a deposit of 10% to show the sellers that you are serious and will move forward with the purchase. Also, if at that point between that moment and the moment that you actually get or have the transfer, you flee the country, yeah, then you have already paid % to the sellers, and that is money that you lose at that point. So yeah, obviously 10%, that's quite a substantial amount. You don't want to lose it. So there's enough reason for you as a buyer to take the process seriously and move forward with the purchase. So the 10% is, you can see it as an incentive for the buyer to move forward with the purchase process and to give security to the sellers. From a timelines perspective, just to show you, so the mortgage application is approved here. We'll state all this in the offer and how we're going to dress up the offer, but we'll mention, for example, that we need 4 weeks for financing, and then the deposit is made 1 week after the financing has been approved. So typically around 5 weeks after the purchase agreement is signed. So that will be right around here. Please.
Thank you. Then a question for both of you. What are the fees you are charging?
Yeah, I think a very fair question. Good to mention, especially as we do not charge a commission or a percentage. It's very easy and transparent to share with you what we do charge. So from we have 2 packages really, a smart package and a complete package. And then we also have a new build packages or new build package for if you're buying specifically a new build project. But let's first look at the smart package. This is more for an independent buyer, for someone that has already bought a property in the past, is aware of the current market and knows how the purchase process works. This is where I will not join you to the viewings. I won't schedule the viewings. I won't join you to any other third-party meetings. I will jump into the process once you actually want to make an offer. So I'll still review other property documents. I'll still do a price research. We'll submit the offer for you. I'll be in contact with the selling agent, of course. We'll review all the documents that come out of the technical inspection, the appraisal, and the notary. And we'll be there for the full pre-transfer support. From the moment that you sign the transfer deed, that is when the process is finished. Now, with the complete package, this is a little bit more for someone who is not so aware of the Dutch housing market, who has not purchased a property before, and would like to have the full support from A to Z, where we also book the viewings for you. We also join you to the viewings. We're there to be there to ask the right questions to the selling agent, answer any questions that you guys might have. Also join you to the technical inspection. We'll be there at the notary to make sure that all the processes are aligned with our expectations and happen as they should happen. And we don't only offer you pre-transfer support, but we'll also support you after the transfer if you still have any questions or need to be in contact with the selling agent at all. Then with the new build package, that's a little bit different because obviously we can't view a property because the property has not been built yet. So we'll join you to the meetings with the developer or with the selling agent. We'll join you in the search process and the registration process. We'll review, of course, all the documents. There are a bunch of documents when you're buying a new build project, so it's very important to review all of that and make sure that you're aware of all the red flags, but also the green flags. We'll do a price benchmark and we'll negotiate on the price for you as well. Be there for the whole pre-transfer support, and up until you get the keys of the process, we'll be there to answer any questions that you might have. Good to know is that with all these packages, we charge a deposit of 499, and then the rest is only due completely at the moment or completely at the end when you're at the notary signing the transfer deed or when you get the statement of completion. That's it. Our costs are not tax deductible yet, but most likely, or at least I'm crossing my fingers, in the future that will change, as I do definitely feel that services like a buying agent is needed in the market that we're currently in. Robin, your costs.
Yes. So essentially we have 4 options here. Let's focus on the mid to first, the first-time home buyer and the buy-to-let first-time buyer. It's the same thing if you go to a new property, really. Basically, it's a fixed fee of 2,999 euros. We have a small down payment of 299 at the start to cover the hours that we put in for the financial analysis. And also what we do is we guide you through the whole house hunting process. Again, we're not looking for the properties. That's, again, what the guys from Expat Housing Network do. But we help you understand the finances. So every time that you find a property, you think, well, hey, this might be my new dream home. Let me know, because then I'll review everything and update your documents and calculations. We don't have a time limit there. So if you find a house in 2-3 months, well done. If it takes you a year and a half, all good. We don't want to pressure you in buying a house just because our service runs out. Doesn't really make sense, I think. So that's the $299 down payment at the start. That goes for all 4 of the options. Now, when you buy a house, again, we guide you through the whole house hunting process, take care of the mortgage application. You don't have to go to a bank. We'll take care of all the communication there. The only thing we need is your input in documents and your likes and dislikes when it comes to your finances, really. So that's what we do. Same goes for buy to let. So an investment mortgage, that's pretty much the same thing as keep to let as well. Something we can discuss later on. Now, on the left hand, you can see the refinancing. This is when you want to change your mortgage, for instance, to an investment mortgage, or when you closed your mortgage, let's say last year, and the interest rate was almost 5%. And in a couple of years, you see the interest rates dropping and you want to refinance your mortgage, so benefit from the lower interest rates, or go to another bank, for instance. That all boils down to the same thing in refinancing. Now, our fee is not necessarily based on the property value that you buy, so it doesn't really matter if you buy something for 250,000 euros or 850,000 euros. That process is pretty much the same, but if we go over $1 million, then the application process at the bank is it takes significantly more time. It's a significantly larger sum, of course, and that's kind of the mark where banks do say, okay, their assessment will be more meticulous. They will have more questions and just takes a bit more time, or significantly more time. So then our fee has an addition and a max number of 3,799. Sorry, Ludo, I do want to emphasize that our fee is tax deductible.
Very good.
So you get back about 37% the year after you boss. So definitely a nice addition right there.
Sure, definitely. Cool, thanks. All right, before we move on to the Q&As that we currently still have, I am also very curious what your experience was within this webinar. Always good to know if we can improve on anything or if we can alter the webinar a bit to your needs. So again, not obligated, but if you have a few seconds, that would be amazing. After this, like I said, we'll move on to all the questions that we still have and answer them accordingly. Great, we're getting some nice numbers in. That is always nice. I think my mom would be proud of this report card. Fantastic. Cool. Thanks, guys. All right, I'm not going to hold you up any longer. Let's move forward with the Q&A.
All right. So we do have a few questions left. Let me see. The first one is for Robin. Is there a calculator you can use in order to calculate your mortgage capacity?
Yes, there are hundreds, undoubtedly, but I'm not necessarily a fan. And I'm not just saying that because if it works for you, by all means do so. But the thing is that a mortgage calculator has to work within a certain set of parameters. First and foremost, they only use the interest rates of the bank that you check it with. It doesn't mean that that's the best mortgage interest rate available. Even more so, that bank that you go with doesn't consider the conditions of the property or the specifications of the property that you look for. So it gives you a very, very rough range of what you can approximately get. Because if you check different options, and I see Ludo just fill out the call, but they'll be fine. If you have a specific property, then it might not necessarily mean that you can close a mortgage. specific lender. So it's important to know what your range is and to have it and to also know what the range of interest rates are. So yes, there are calculators. We have one on our website as well, and not necessarily a fan of that as well. By all means, just have somebody check your options, because then we can see what part of your income we can include. If you have the 30% ruling, for instance, that's not something that you can really use in an online calculator. Same goes with additions of, maybe you have a benefit budget, for instance, or a 13th month, or also something that applies with a lot of people is a bonus income. So be sure, it really depends per lender what their conditions are there. So have it checked, and then you know. It takes less time to send me an email and have me check it than figure it out all yourself online.
All right, thank you. Ludo, you're back?
Yes, indeed. I don't know what happened. My internet dropped, so I'm now on my hotspot, and now it's working better than ever. So maybe I should do this next time as well.
All right, then I do have a question for you.
Perfect.
Is there an online way to do a price research and compare the property with comparable properties?
Yeah, good question. Yes, that is possible. I mean, it's not rocket science. So to explain a little bit how we do our price research is we use the comparable method. It's the same method as an appraiser is going to use. We compare the property that we want to buy with, well, comparable properties and their purchase price. Now, their purchase price per square meter, actually. A few factors we keep in mind: the square meters of the property, the year it was built in, obviously the location, but also the amount of bedrooms, bathrooms, ground lease situation, energy label, all that kind of stuff has impact on the value. Even things like if it has canal view or not, if the balcony is facing a playground or if the balcony is facing the park. These are all things that have impact on the value and things we have to keep in mind. Now, the purchase prices of these properties, they're public information. You will have to look them up in kind of like a library. It's called the land registry or the cadastre, and this is where you can download the documents and the ownership deeds and see what the purchase prices are. It's not very user friendly. Obviously, we as a buying agent, we have our own systems where it's a little bit more user friendly, and we have experience on knowing what weighs heavier than other variables in this whole comparable process. But it is possible to do so. Like I said, compare the properties that are comparable to the property that you want to buy with their purchase price per square meter, multiplied with the amount of square meters that you want to purchase. And that is typically, in a very easy way of explaining it and in a nutshell, how you would determine the market value, how an appraiser is going to do it. But keep in mind, this is such an important thing to do, because a difference of 5,000 or 10,000 euros can also mean a difference of 5,000 euros coming from a mortgage. And if you don't have the difference just laying around, it can mean the difference between securing the financing and securing the property, and not securing the financing and not securing the property. So something to be careful with.
All right, thank you. I can ask one more question and then I have to leave for my next meeting. But Robin, I think a question for you.
Sure.
Someone wants to buy a property for their daughter.
Mm-hmm.
However, they live overseas. Is it still possible to get a mortgage?
Yes, it is. Preferably when you have the Dutch nationality. If you have a Dutch passport, it's definitely possible. There are options there. And gradually now, banks do tend to change their conditions a bit, that they allow renting or investment mortgages abroad as well, from people buying abroad here in the Netherlands. So gradually there are more options available there. By all means, schedule a call to discuss it in further detail. So there might be possibilities, but it's very specific niche. The thing is that you cannot close a mortgage with the three of you, or if you're with the three of you. But then it has to be on your name and your daughter lives in it. So there are possibilities, but it's subject to specific rules. Yeah.
All right, thank you. I have to leave. I hope you can answer the final questions.
Yeah, sure. I can also see the Q&A, so let me see what I can do. I see Ludo just dropped out of the call. He has some issues with his internet.
We start with
Rick, by all means,
and I'm sure he'll be back soon.
yeah, no worries. Best of luck with your appointment, and thanks for hosting the Q&A.
Thank you, guys. Good luck. Bye bye.
I don't know what's happening with my
No
internet, but I'm back.
Yeah, very good, very good.
So I can't see the Q&A anymore, or at least I only see the questions that come in now. But I think you can, Robin.
Yeah. Let me just check. I see one here. A lot of properties in Amsterdam are not eternally bought. Can you explain a bit more about what the consequences are? I expect that they mentioned something about that they mean something about ground lease. Would you like to explain something about ground lease in Amsterdam?
Yeah, sure, of course. Can you repeat the question one more time?
Yeah, a lot of properties in Amsterdam are not eternally bought.
Yeah. So, well, indeed, that refers to ground lease. To explain a little bit what ground lease entails, way back, properties were quite expensive. Well, the government came up with a measure to make the purchase of properties more affordable, so to say. So what they did, they split ownership of the ground and ownership of the property, so that you would only buy the property and then lease the ground for the amount of years that you were owner of the property. So instead of paying 100,000 euros immediately also for the ground, you would only pay 5,000 euros for the 5 years that you're leasing the ground, so to say. So again, yeah, that would make it a lot cheaper. However, nowadays it's become more of a earning model for the municipality, at least in my opinion, because you have the purchase price of the properties are on the rather high side, and now you're paying, let's say, between 200 and 5,000 euros per year on ground lease. So this is a fee that you're paying to the municipality to have your property on that ground, because the municipality at the end of the day is the owner of the ground. You have a few scenarios here. First of all, a situation where you are actually the owner, then the property is on ground. Then you have a situation like I just mentioned, you're leasing the ground and you're paying a yearly amount to the municipality. Then you also have a situation where the owners of the property have already paid for, let's say, 30 or 40 years into the future, so that for the next 30 or 40 years, you do not have to pay ground lease anymore. This is where it's been paid off for for the current term, so to say. Now, you also have a situation where the ground lease has been paid off for the rest of time, or the ground lease have been paid off eternally. This means that the property is still on ground lease, the ground is still owned by the municipality, but the lease payments have been paid off already for the rest of time. Mm-hmm. Now, keep in mind, it's not as intimidating as it sounds. It's not like the municipality can just kick you off the ground and say, well, now we want to make a hotel here, so leave. No, the only thing that they can do is charge you ground lease. And if you have already paid for the rest of the time, and the only thing that limits you is that if you want to change the destination of the property, so you want to change it into commercial real estate or anything like that, then you also have to ask permission of your ground leaser, in this case the municipality. Cool. That's what ground lease entails.
Yeah, correct. Now there's a small addition when it comes to your mortgage. If you do have to pay an annual fee, usually it's twice a year, then that does have an impact on your mortgage capacity. So you can borrow a bit less if you have to pay ground lease. Kind of makes sense as well, because the money that you spent on ground lease you cannot use to do grocery shopping as well from. Unfortunately, it's still the case that you can spend money only once. So it does have an impact on your mortgage capacity. But again, just have us check what that really is. Now I can see quite a few questions still going on, so let me go through them. How do having mortgages already in a home country affect eligibility in securing the mortgage in the Netherlands? So what happens if you already have a mortgage abroad, in, for instance, your home country? How does that affect in the Netherlands? So basically, I will want to know, because I'm your financial specialist, so that means that I want to know what your finances look like, especially when it comes to having a loan somewhere else. Most important thing is usually what happens if you still have a mortgage somewhere else, that somebody lives in the property, right? So you're renting it out. And then it makes the most sense if the rental income covers the mortgage payments comfortably. If that's the case, all good. Then it doesn't necessarily have to impact your mortgage in the Netherlands in any way. There's a couple of countries that the Netherlands can check if you have credits. They're quite random countries: Germany, Austria, Belgium, Italy, and I think Ireland, not entirely sure. So those are countries where it will be checked. Other countries cannot be checked, but we will want to know because we want to give you sound financial advice. Now, one other country is if you buy, another question, sorry, if you buy as an expat real estate here in the Netherlands, will the interest paid on the mortgage still be fully deductible from your income? Yes. As long as you live here, pay taxes here, then over the amount that you pay taxes over from your income, that is tax deductible. So yes, definitely you can benefit from that. Let's see. So a lot of mortgage-based questions. So I do want to give you a question as well. There's one question, please, can you explain once again about the key handover and liability term? What I suggest is to check the video recording that will be shared after this call. I have to buy a house in my home country and have to take out a loan for that. How should I plan the purchase considering? And so if you buy a house in your home country, if it's not the Netherlands, banks only work with properties that are located in the Netherlands. So that's very important to note. Let's see, one more question here. Let's do two more, because then we're pressed for time as well, of course. I see a question about types of mortgages. Check in with the call, because then I can explain that a bit more specifically. Yes, we have that. Ludo, when looking at a property on Funda, are they actually on sale, or is it real estate agents showing properties that they've already sold and generating leads?
Good question. No, the properties that you see on Funda will all be for sale. Now, keep in mind, some agents are quicker in updating than others, in the sense that sometimes we have properties that they've got an offer accepted yesterday, and then today they haven't updated it yet that it says under offer. But all properties that are on sale or on Funda are on sale indeed. Right. So no need to expect that properties are just as an example properties or anything like that. Good to keep in mind, though.
Clearly stated, yeah.
Yeah, indeed. Good to keep in mind, though, is that if there's anything mentioned like under offer or sold under reservation or waiting for financing, something like that, then the property has already a buyer. So there's no real need to actually respond to a property like that, because they will already have signed the purchase agreement and moved on with the process. So really something extraordinary needs to happen, does the purchase not go through at that moment.
Very good. Then let me have the last two, really. What happens when the temporary contract has a fixed date and not possible to extend by definition? Really depends on what your situation is and what your job is currently. Basically, we have to use the average of the last 3 years. That's basically what we have to do then, because then we have to predict the future with your past, if you cannot get that. Usually, what I can see, if there's definitely no possibility of extension, if you're, for instance, a PhD student. If that's the case, or if you're a medical doctor, there are possibilities to, because then it makes sense that you have a definite contract, so a fixed term, and that it will not be extended automatically. But your job perspective is very good, because that's one of the other things, right? Banks want to have perspective of your income. So if that's a specific situation, then there can be possibilities, but the range of lenders is a bit more selective. So again, let me know. And then one last one I saw here. Oh yeah, not sure if it was covered. What yearly income level will the bank consider, and what mortgage will it approve based on this? Basically, you can get a mortgage on any old income. The thing is that the more you earn, the higher your maximum mortgage capacity is. So basically, if you have an income, you can close a mortgage, but check in with us to see what your range is really there. And I see the last one from Anita right now. Thank you. We have a property abroad, fully paid. How does it affect the mortgage? Can it be used as onderpand? Great use of the Dutch word. So how can it be used for collateral as a security for your loan? It does not impact your mortgage in the Netherlands, but it can also not be used as security or collateral of your loan here in the Netherlands, unfortunately. Again, if you have rental income, also that cannot be included, but it's always good to know that you have financial backing abroad as well. Now, we covered most of the questions right now, and we are over time quite a bit as well. If you have any additional questions, feel free to reach out to us. Schedule a call, just an introductory call, or just a call with some questions, and we'll happily answer them for you. Ludo, do you have anything to add for now?
No. If there are any questions indeed unanswered or anything that pops up after this webinar, well, feel free to rewatch the webinar tomorrow, and otherwise, reach out to us. In the email you receive tomorrow, we'll have the recording and the slides, and obviously our information to reach out to us. And in the slides itself, you have a button here that you can press or scan the QR code to be redirected to the site of Mr. Mortgage. And then we hope to speak to you guys soon. Thanks very much for joining. Thanks, Robin, for being our reliable partner when it comes to mortgages.
Thanks for hosting me.
You're very, very welcome. Sorry, I dropped out a few times.
No worries.
I came back. That's the most important. And then we'll see each other in the near future, hopefully.
Bye, guys.
Bye, guys. Enjoy the sun.